Welcome to Fintech Chatting, presented by Tier 1 People, leaders in Fintech executive search. Follow us on your favorite podcast player or Fintech Chatter TV on YouTube.
Hello and welcome to Fintech Chatter, the show for everything Fintech Down Under. I'm your host, Dexter Cousins, and today's guest is Julian Fayad from Loan Options. Julian, welcome to your Fintech Chatter debut.
Thank you very much for having me, Dexter. It's an absolute honor and a pleasure. Thank you.
You're welcome. Shout out to Simon Lee, who kind of put us in contact and recommended you as a guest. Simon is my co-host on our FinTech News monthly kind of show that we put together. And when we were chatting about the next kind of generation of FinTech entrepreneurs, he said, you've got to get Julian on the show. So excited to have you. And I'm really looking forward to finding out more about loan options.
Yeah, let's dive in, eh?
Yeah, sure. So first of all, tell us what's the big problem that Loan Options solves?
Well, I think it's the main one is transparency and access to financial products. I think if you look at it like that, if I rewind a little bit, 2017, I started building the concept for this and the minimum viable product. I've been doing asset finance now for 12 years. And the one thing that I noticed it was in our industry is that we seem to be the only ones that don't provide a quote before we provide the service. And that was always strange to me. I got brothers in the building industry and that, construction industry is kind of, people are quite hard on it sometimes, but even they provide a quote before they provide their services. Yep. And so that was always something I couldn't really wrap my head
even
around.
Recruiters do, right?
Yeah. So I was like, you call up even now, even today, you walk into a dealership and you ask the finance manager at the dealership, what's my best rate? And they will dance around that question like you wouldn't believe. And it's literally the last thing they want to tell you. And there's something really wrong about that. So I looked at it and was like, okay, there's a few problems that we need to solve to get to that point. But ultimately now within 5-6 seconds, you can get access to all of the best rates, all of the information relating to the fees that are relevant to each individual lender. And you can apply with one application form for over 75 different lenders without impacting your credit score. So you don't need to shop around at multiple different places. You go to one spot, put your details in. As you're entering in your information about your employment, your income, your expenses, the Loan Options AI algorithms are refining the results using our matching engine and also our AI algorithms to provide the most probable match.
12 months ago, I wouldn't have really been making a big deal about AI. It all of a sudden became a massive deal. But I think those of us who've been around kind of long enough around technology, we're always using AI, and it's only kind of come into the public conscious, I guess, over this last 12 months with ChatGPT. When you talk about AI, can you be like a little bit more specific? Because there's a lot of smoke and mirrors around it.
Yeah, absolutely. Yeah. And AI is actually, you're right about that. It's a broad category. So AI could be, even Excel formulas are AI, technically speaking, right? If, and, or statements are AI. So inside AI, you have machine learning. And then inside, which is the subset, inside machine learning, you've got like deep learning and neural nets, right? Yeah. So it keeps, honing down. And one of the other things that we've seen recently with ChatGPT is like large language models or LLMs. They're AI as well. They're predictive text and all these kinds of things. They're all versions or subsets of AI. Specifically, what we're looking at is like neural nets and machine learning algorithms that are providing a probability of approval for certain lenders, providing a probability of settlement, providing things like the likelihood that that lender is the best match based on historical data. Yeah. So essentially how it works is we've set up a data pipeline of all of the scenarios that get run with our clients, all of the successful funded loans. We've got, tens of thousands of rows of data, both successful, hundreds of thousands of rows of data for both successful outcomes and unsuccessful outcomes. And that feeds into Learn over and over again. It's a reinforcement learning process where every time a loan settles, it's updating the pipeline, the data pipeline, and thus making the algorithms more and more accurate as we go along. So when we first started, were they super accurate? Not really, but that's kind of the point. You got to start somewhere. And so I was overly optimistic about AI very early on. When I left school, I was studying web development, and in there was some courses around AI, and I got super obsessed with it and thought this is going to be the biggest game changer ever. But I guess I was wrong about the timeline and how fast it would come about. And so, I guess in that sense, I've been obsessed with AI for a very long time, the last 6 years in particular. And so, the matching engine didn't start as AI, it started as just logic, credit, it was effectively a credit engine. We took the lenders that we had on our panel and we reverse engineered their credit policies to decision a loan. And then I thought, how could we make this better? And I thought AI could do a better job, because really I was looking at myself, I was doing that process manual. So the selection of a lender is actually quite a manual process. Yeah. And even the best brokers in the country still do that quite a fair bit manually. I guess from my perspective, it was like, what's the next evolution of this? And I really thought AI would replace the credit rules, because those credit rules are really difficult to update and maintain. And when we tried running it just with the AI alone, we didn't get the result we were looking for. And there was one specific example where a lender made wholesale changes to their credit policy, and then they weren't showing up in some of the scenarios. And I was like, okay, well, by itself, with the level of data that we have, this is not sufficient. So I think we need to do a hybrid model. So that's what we've settled on. We've settled on basic things like minimum and maximum loan term. Yeah. A credit rule can do a far better job because it's quite binary, but AI can do a fantastic job of capturing things that maybe aren't necessarily in credit policy. It can capture the gray area that's just outside the credit policy, and also identify areas that are inside credit policy but are high risk. And so we can feed that back to the lenders and help them improve their risk models over time as well. So
it's fascinating you share that, because I remember 2016, 2017, and kind of AI was the buzz back then as well, right? And at the time it was chatbots. And it's just fascinating to hear you talk about the kind of gradual kind of evolution of technology. And I always like to think of it, the analogy of my kids now, what they've got in terms of digital entertainment on streaming anytime, anywhere, anything they want. When I was their age, I had a black and white TV in a bedroom with 3 channels, cassette tape and a radio, right? And that was my kind of in-house entertainment. And it didn't go from that to streaming overnight. It went to CD, VHS, DVD, USB mini disc moment, right? Yeah. I bought a mini disc, and then it went to USB and MP3 player, right? Yeah. Like pretty much, kind of within about a year of buying a mini disc player. And it's kind of amazing that was the tipping point where we went from kind of analog, dabbling in digital, to then going this fully digital path.
Yeah. And my perspective is that, there's a great saying that says you can overestimate how much you can achieve in a year and underestimate how much you can achieve in 10. And I think AI is a perfect example of that. I overestimated what it could achieve in a year. And I think like ChatGPT is great because now it's brought it into the mainstream. It's made so many great, powerful tools really accessible, not just through ChatGPT, but even other providers. Like you can create artwork now, you can create logos, you can create, all kinds of different things that just streamline business operations. You can create a process manual off a set of bullet points and it will write a 30-page SOP for you. Like it's just really great what we're able to do with it already. I'm more excited about what's still to come.
So let's talk about where you're at now with Loan Options. First of all, how many people are in the business?
There's Loan Options. We got 2 businesses. So one's UX and one's Loan Options AI. Combined, there's nearly 60 people. Plus we've got 20 people in a call center. So all up nearly 80. Loan Options accounts for about half of that. So I would say like about 40 people.
Right. Yeah. And in terms of, I guess, kind of the model and the revenue model, are you acting as a broker? Are you underwriting loans yourself?
No. So we're a broker model. So we're not actually writing the loans ourselves. We're facilitating the loans through whatever lending option, completely unbiased, is the best for that customer. So they give us, their information through the application form, and as they're entering it in real time, they're getting feedback about which lenders are able to do their specific circumstances and what the pricing is.
Yeah.
So it's not like a comparison site. It's far more advanced than that. When we first launched, the messaging we were using was an intelligent marketplace and, or an intelligent comparison site, because it doesn't just say from XYZ percentage rate. It's actually giving them the real rate that they'll deserve and qualify for. So our commission, we get paid commission from the lenders for successful outcomes. So I really like that business model, because if we don't deliver value to the client, save them money, get them a great deal, we don't get paid.
Yeah.
And so our incentive is to make sure that we deliver value to the client, and they obviously it doesn't cost them anything. There's no risk for them.
And obviously from your side, if you're going underwriting loans, there's a massive risk, right? Amount of capital you've got to have, or all of those.
That's the
charges.
big one, capital. I think when you're bootstrapping a business, I think you've got to be obviously super worried about things that are capital intensive. If we wanted to become a lender right away, we would need a significant amount of capital, which we don't currently have access to. However, it would be on our roadmap. The reason I say that is, I'm not saying we would want to capture market share from existing lenders, right, who are our partners, our valued partners, but we'd look to build a product that solves issues that aren't currently being solved. So really look at, and there's lots of great technologies. I just think giving customers flexibility. I'll give you one example. So we see a lot of customers that, they got paid late from their boss, or, whatever it is. The reason is they had money come out of their account that they weren't expected. They dishonor on a payment. They have the money, it's in a different account, or, they can transfer it, or they'll get paid the next day. But like right now with the current technology, it just gives them a dishonor fee. It reflects poorly on their credit file and things like that. But with technologies like Pay2 and, real-time direct debit services, like you can actually wait for them to get paid and then take, when there's enough money in their account, take the payment. So solving some of those problems that are like pain points for customers, and then they have to get on the phone and wait on hold to fix it. And, I would look to build a product that would be solving a lot of those pain point issues, make sure it's full digital end to end, give them access to funds, probably give them access to a revolving facility, because we're seeing that a lot of facilities just have an end date, and then, they still need access to the funds beyond that end date. So as they pay it down, they can draw back down. Yeah. There aren't a lot of facilities in the consumer space that you can do that. So we would look to solve a problem, not to step on people's toes, if that makes sense. Yeah.
You talked about the kind of credit decisioning models, and it's probably one of the biggest frustrations that I just have with the fintech industry in general, is we're not jumping on this. As a small business owner, and kind of considering myself to be fairly successful, when it comes to credit and it comes to loan applications, it's kind of the bane of my life, right? And I feel like I'm a pauper and a kind of peasant on the streets rather than a successful business person, right? Add on to that the days and days of paperwork and providing information that I've given like 3 different ways, sliced up in 3 different, and it's such a, it's then the added frustration of, hey, you've taken my time out of the business, and now if, to do your job. What do you see as being the kind of some of the still low hanging fruit that are there for entrepreneurs like yourself that can come in and kind of start to fix these problems?
Yeah, look, it's a really good question. And I speak to business owners like all day, every day, and not necessarily tech founders. I speak to people from every industry, and understanding that, like at the moment, construction's obviously gone through a bit of a difficult time. And there are other industries of food and hospitality that have had, real big struggles in recent times with, the pandemic and things like that. People need, firstly, to be aware of what options are available to themselves. So one of the things we're doing in our business is we've set up an academy, and we're going to build, it's a slow project, but it's one that we're going to continue to power through, set up a bunch of resources, just educating business owners on what options are available. That's the first thing. Yeah. if you've got a supplier who pays you really slow, or you need access to that money really quickly because you need to, buy more stock that you can sell to someone else, there are solutions available. And, it's not the sort of inside the box bank, lots of paperwork, lots of headache process. There's a lot of really great fintech businesses out there that are solving some of those problems. And in terms of the low hanging fruit, I think, there's a lot of already great products. I don't think we need to reinvent the wheel here. I just think we need to raise awareness about it.
Yeah.
Prosper's doing a great job with SME Capital, Shift doing a great job, Lumi. There's a lot of these SME working capital lenders that are innovating with new products like lines of credit, so that facilities are revolving. There's a lot better tech coming out with regards to like invoice and data finance, where they can just connect to their Xero or MYB or accounting package if they're with QuickBooks or any other. And that can allow them, once they raise the invoice to an approved supplier, to get paid the same day. And then when they actually receive the funds, give away a very small percentage of that invoice. But when you make those things digital, the whole process becomes easier. If you have to manually provide invoices and send email, it's just not that attractive for business owners who are very busy. But the minute you can connect to an accounting package, set it up once, and then every time, just in the normal course of business, you're creating or raising an invoice, you can receive the funds the next day, so that you can continue to grow your business without worrying.
Yeah. And on the consumer side, CDR, it continues to kind of frustrate, I think, the industry and challenges. And look, there's unfortunately businesses who've gone out and tried and failed, mainly because they were seeing potentially the opportunity in CDR, and it's just taken so long to get traction with it. Do you kind of see it as a kind of catalyst for further growth for loan options, or are you building just without that in mind?
Well, we absolutely. So definitely, I think the future of finance is not just is CDR, but we're talking about all the subsets of that, like whether it's open banking, open finance, all the way down the line. We've still got a long way to go. For example, right now in my business, I can't even use CDR data and send it to the lenders. Just the way that the legislation is structured, it's not clear whether asset finance brokers, which is the class that we fall under, we're not mortgage brokers, we don't do property lending. It's not clear whether we're also considered trusted advisors. And the model is like you can be a trusted advisor of one lender, maybe a few, but not 75 like we are. And most of the 75 lenders aren't CDR ready, which is annoying, because if we can't share the data with them, if they're not providers, then they can't be receivers.
Yeah.
So we can't, even if we got the client to do the CDR process, we can't actually use that in our business now. We have to use the screen scraping technology because the lenders accept that. We've got a separate use case that we're bubbling away on the side. We started that project that will use CDR data. We're very excited about that. And I'm thinking that's going to be more of a customer nurture, customer education, financial wellness project.
Yeah.
And less to do with the day-to-day, settling loans and submitting for credit approval, so to speak. But it's definitely the future. I think it makes sense. I think we need to be really careful with regard to how we regulate and make sure that we've got more private enterprise in control of these projects and less government. I think the government can be overly burdensome with and very slow to move, and lots of red tape, lots of bureaucracy, and not really long-term strategic thinking. Focus on an election cycle. And I think as an industry, I wouldn't say try and self-regulate, but we should, try and be better at creating a community or advisory committees that are steering the direction external of the government. Yeah. And the reason for that, I believe that should be the way things are done, is because as entrepreneurs, as we can get things done a lot faster. Yeah. Yes, we don't have the capital and the unlimited printing press that the government has, but perhaps we could lobby the government to get, I guess the right amount of capital invested in these big. This is an infrastructure project. Yeah, CDR is not a tech it's an infrastructure. You've got legacy banks, legacy banking software, you've got so many things to deal with there, right? Having startups, companies, entrepreneurs solve these problems because they can move and be a lot more nimble and fail fast and move on to the next thing, I think is the right solution. We just need to come together a little bit more as a community and decide so that we can all get on the same page. It's difficult because everyone's got a different competing agenda, and I understand all of that, but maybe I'm just optimistic. I think we could be doing a better job and less reliant on them for actually providing the guidance and relying on them to solve the problem. We just need to basically give them what we think is good legislation and just let them, pass it, right? That's the less they get involved, the faster everything will happen.
Right. What was it that drove you to launch your own business?
Yeah, wow, that's a good question. That's a great question. Look, I think I was always very driven. I always knew that I wanted to be successful at whatever I wanted to do. I have the personality of someone who commits 100% or nothing at all. I don't have the halfway button. I'm like the old style light switches that are either on or off. I don't have the dimming switch. So I was interested in very small amount of things, but everything I was interested in a lot. And IT was one of them. Cars is another one, and that really hasn't left me. You can see from the office, we've got a racing simulator, and we've got a lot of the speed DNA through our business. In terms.
So you're a Formula One guy, or
Formula One guy? Yeah. One of our giveaways for new partnerships is a Formula One experience next year in Melbourne.
Yeah.
So we hosted a track day, a battle of the fast fintechs track day. Got some great footage and great participation from some of the fintech lenders there as well. So we're all about that. But at the time I left school, I was studying web development. Finance was my backup career. I just thought it wasn't as interesting to me as web development. And then I was studying full time, obviously needed to work. So I got a job full time, and very quickly I moved up through the ranks, and I got to a point where I was like, full-time work, full-time study. It was really hard. And so I was like, okay, I'm going to put the web development course on hold. I'll come back to that. I'm going to see what I can achieve here in finance. I was making great money, coming from very humble beginnings. That was, I was probably in 12, 18, 24 months making more money than I probably thought I ever could.
Yeah.
And so I was like, okay, so what's next? I went from being a finance broker to a junior finance broker to a finance broker to a senior broker to a group manager to a state manager. So I helped scale a business. It was someone else's business, but I treated it as if it was my own. And every business, like I said, I only have 100% setting. I either I'm there and I'm 100% committed, or I'm gone. And I got to a point where I'd maybe outgrown. So an opportunity came up. Auto Approve was an automotive finance specialist, and we were looking to get a platform to, I guess, use tech to distribute automotive finance. Our main clients were car dealerships. We scaled that business. I was the first employee, and we grew that to probably about half the size Loan Options is now. So at the time it was quite a big player, but when COVID hit, they wanted to hibernate the business. It got acquired by an ASX listed business. And, but yeah, I was the general manager of that business. And then I'd kind of, again, was just not being listened to. They wanted to hibernate a business that was performing okay, pretty well, had lots of potential. And so, yeah, I started again. I had to.
So when did you start Loan Options?
August 1st, 2020. So just had our third birthday.
Yeah.
And so whilst it is it was and is a startup, or now it's kind of moving past that. But, I had been building my network for years before that, So there's a great saying that said, you should be building your network long before you ever need it.
Yeah.
And so I did everything I possibly could to, even though you spoke about giving without any expectation of receiving. That's pretty much built my career on that philosophy.
Yeah.
Always giving, always being there for people who need it, always giving advice where I think I can add value. And so when I started my own business, things were a bit different. I got to make my own decisions. I ended up doing an equity swap because now it's called UX, my business partners Simon and Grant at the time. And that was because they had a software company and we were going to have an exchange of value. I was giving them equity and loan options, told them that they knew about the vision and what we was trying to achieve. And they had an asset finance CRM, which is, I guess, like the workhorse of how we do the facilitation of loans. You need a really good, seamless system. Yeah.
I want to talk about that because that is such a great approach to have to growing a business. Pretty much, 99% of founders will be taught, go out, have an idea. If you're a non-tech founder, find a tech founder. And it's so hard, right? Like it's like so hard. And then, you're bringing in, you're looking to raise money, you're looking to hire someone, you give them some equity. Then they've got to go and hire all these people and build a solution. Whereas you've just gone out and found the solution and then kind of done what you have to do anyway to get a tech founder across as well.
And look, I'm being totally honest here. I don't know that it was that deliberate. At the time, I felt like we were like I had started this in 2017, building the MVP. I built the MVP myself. We were using it for 3 years with great success. I knew the potential it had. And one of the promises that was broken by the previous company that bought that business was that they were going to invest and build the technology.
Yeah.
And I was prepared to hand over my intellectual property.
Right.
If they were going to build it for the benefit of the business, And so when I started Loan Options, I felt like I was 3 years behind now. I had to start again. And so I was like, I need to try and get this to the market as fast as possible because there's, people that were trying to copy the ideas, that'd seen it, people from lenders that I'd shown it to left to join our competitors and things like that. It was all kinds of weird stuff was happening. So I was like, okay, we need to get this to market quick. And that was one of the reasons why I made the decision. I'm like, they got a working product that can integrate nicely.
Yeah.
They understand the industry. They have the developers there. And I can bring my IP to the table to enhance their product as well as build out our own, and their product will enhance ours as well. So it was more about who can I partner with to bring this to life in the fastest way possible, because I don't have endless stream of capital. I literally, to start Loan Options, I drew out during COVID, they were letting you take super out. I took money out of my super to start Loan Options. That was, I haven't really told many people that, but that's the truth. There wasn't a lot of money, so I was very, very calculated with how I was going to spend that money. I did everything to MVP level to get it generating revenue, like website, MVP, let it generate revenue to the point where it's generating enough that I can then invest in that thing. And that's pretty much the approach I took to all things. So if I was building out a channel, before I went and, put on someone to a resource to support that channel, I wanted to see if I could get it to generate enough revenue to support a resource in that channel and then help grow it. And that's really how we were very lean. We started in an office that's half the size of this. And we had 4 offices in 18 months or something, because it grew very quickly. And I think a big part of that was that we were doing things very differently to the rest of the industry. There's so many things I could go into there, but essentially, it's so easy to get cut through or to make noise, or when everything's like a breath of fresh air. The vision for the business was different to everything else. The way we spoke to customers was different to everything else. The transparency, the integrity piece, we'd often tell customers, you're better off in your existing loan. We're not going to refinance it for you. And people a lot of people listening to this go, okay, well, it'd be like a builder saying, yeah, I could renovate your house, but I'm going to do a worse job than it currently is. So let's just leave it the way it is. We'll give it a coat of paint and that's it. It's going to cost you a lot of money for not much improvement. So just that approach, and people really resonated with it. So that's part of the success. But making good decisions when you start, especially when you're bootstrapped, there's not a lot of room for error. You know, a couple of bad months in a row, you can burn through all of your money and then, you know, have to sell your house or, you know, whatever. And you've got a lot of responsibility. You know, we've got, the payroll every week. Like you just think about how many mouths we're responsible for, and their families and their mortgages and everything else. Like it's very, very stressful. But if you're smart about it and you don't take too many risks too quickly, and you focus on things that are going to generate revenue quickly and not overinvest in projects. Our first version of the tech is not what you currently see. That's iteration 3. You know? But we built it to get it to the point where we thought it's going to do 70 or 80% of what we need it to do in terms of the long-term vision, but we didn't overinvest in the product, in building the product or the tech. And so now it's been generating revenue for the last couple of years at a tech level. And then we're going to launch the next version in the next 8 to 12 weeks. But that's only because the previous version has given us the ability to invest again in that tech. So if it's not making you money, you got to figure out very quickly what to do with it.
Yeah.
So
on that point, you know, dealing with stress, dealing with mental health, certainly in this last 12 months, as you know, the market's kind of, you know, capitulated for many founders, and it's become more and more difficult. And, you know, those challenges that you talked about are really starting to have an impact on people and their mental health. What have you done to kind of keep yourself in a state that you can go? You mentioned you're either on or off. You know, that must be exhausting, right, as well. So how do you keep yourself mentally and physically well and in shape that you can do that, and whilst having the burden of that responsibility and 60 mouths to feed and payroll every month?
Yeah. It's a good question. I think what works for me may not necessarily work for other people, but I have a really disciplined approach to making sure I exercise to the point of exhaustion that gets rid of a lot of angst. And I do that before I start the day. So I think physical exercise and staying physically in good health and feeling really good about yourself is very, very helpful. It also, you know, improves your mood, and, you know, it's all, I'm not making that up. It's all proven now. But so that's one thing. I do think people, in order to have good mental health, you should be focusing on your physical health, your nutrition and things like that.
This is where we get the Athletic Greens sponsorship into the podcast.
Perfect.
It's actually, Julian, it's actually my claim to fame, right? I will never spruik Athletic Greens on this show. The only podcast out there that isn't sponsored by Athletic Greens.
Yeah. God. So yeah, physical health. I think there's a few other things that should be mentioned, right? For me, the thing that works really good in terms of managing my like all the stress and things like that is you've got to find something like whether it's a hobby or a passion or a something where you can have the moment to switch off. So for me, recently that's been golf. It's like the only thing that I do really where I'm not thinking about work, and I play with my brothers and some people from the industry and things like that. And I'm not good, you know, I still suck, but it's just a great outlet. So you've got to have an outlet. For some people that might be going to a day spa, getting a massage, or for some people that might be maybe going for a run is their outlet, or art, or whatever that might be. So you need to have an outlet. You need to have a good network of people that are like-minded. So for me, that's been Club of United Business. And that's just all entrepreneurs that are all on the same wavelength as me, all going through similar things to me. You know, it's a great way to have people that understand. If I went to a family barbecue and tried to explain some of the stresses that I have in this business, there's probably next to 0% chance that people understand what I'm talking about, you know, because how many fintech bootstrap startups are there? I mean, these days there ain't a lot. And I think we should be trying to, you know, to go back to building businesses that are sensible and viable from day one. You know, first month we were profitable. So I don't know how many fintech startups can say that, but it's because we managed costs really well in the early days, and we only scaled up. We took the step to scale up our costs and marketing and everything only once the business was ready to do that. But yeah, just going back to what I think exercise for me, I do jiu-jitsu, martial arts. There's a few things in there with that are really good about discipline and controlling your emotions, during those times of stress, that are really helpful for me. And having a network that's not just family, because my wife's very supportive. My daughter thinks I'm a superhero, literally. And my son, he's still a bit too young. But
how old's your daughter?
5. Yeah.
And your son?
He's 3. Yeah. So my daughter, I bring her to the office. I try and get her involved and understanding, very much like you said with your daughter. And, she's still very, very young, but I wanted to understand those principles of like hard work and, you're able to achieve whatever you want to do, as long as you commit, right, and be disciplined with your actions and So my wife's very supportive. My kids very supportive. Love that. But there is another level of support that you need, which is more relevant to business and difficulty with whether it's staff or hiring people or, a partnership that's not going well or, whatever it is. There needs to be somebody who understands that and has been through that and that can give you the hindsight. Yeah. It's such a big advantage in business to have people that have been through it all before you and can say, well, here's what I did to solve the problem. Or in hindsight, here's what I wish I did, but now I'm telling you that you can do that.
I think that's actually one of my kind of personal frustrations that I've got with the industry and the ecosystem at present, Julian, is there's a lot of people out there claiming to be advisors who haven't really experienced growing a business and doing any of those things, and then are out there kind of, charging people for advice, which is literally the worst advice you can get.
Yeah, I've seen some bad ones.
Yeah, and yet you've got people who have experienced everything, who would never ask for money for advice, right? And kind of give it freely. And they're what I call the credible people, right? They've been there, they've seen it and done it, not just once, but maybe twice or 3 times. And so they kind of, the guidance and the advice that you get from them, not only is it helpful, but you're getting shown a path forward, right? Where you feel it, you kind of start to move out of a state where you're feeling desperate and alone to one where you start to feel empowered because you know that, hey, it's not just me. And I see this all the time, when I'm speaking with founders and CEOs and execs, and they think that the problem that they're experiencing right then, they're the only one experiencing it. And when I share that actually your competitors have got the same problem, and they might be on LinkedIn saying we're, smoking it, but they ain't, right? Yeah, they're getting burnt out like you are. And I think it's kind of to know that, one of the challenges we've got in society is, as you pointed out earlier, we've kind of been building these businesses on a falsehood, right? And a kind of a false economy as well. Like you're just going to keep getting capital. And it's set up this, kind of these expectations now that you're a failure if you sell your business for $50 million. What?
That's crazy.
That's great, right? That's but it's reassuring to hear that, you're able to get that kind of support and guidance and advice outside of, family or outside of your kind of work network and immediate network.
Yeah, I think it's been really helpful. And the other thing I'll say that I've learned in my journey is that there is always going to be a little bit of like that, I don't know if you would call it tall poppy syndrome. So
it's rife, right? I mean, you've only got to look
Australia,
at
especially
media. It's terrible, man. Right?
So focus on the things that you can control and don't worry about the noise. That's something I learned, in this journey is like, as long as you focus on things that are in your direct control, then everything will be all right, So the everything else, the noise, the LinkedIn, like we're pretty active on LinkedIn, so I'm making fun of myself here, but all the rest of it, it's just noise, or it's just marketing, or it's just, people that are, trying to chop you down. Yeah. It's that tall poppy syndrome or whatever. So if you just every day you look instead of worrying about what's going on in the world, you just focus on what are the next 5 things that I can do today, tomorrow, the next day, that's going to put me on my path or put me closer towards my goals, whatever they are, whether it's a 50 million valuation or and it's funny that like these days, if you asked yourself when you're a kid, if you sold a business for $50 million, would you be happy? There would be nobody there that would say, oh wow, that's not good enough. I think people get too caught up in this is a unicorn, that's a unicorn. Yeah. At the end of the day, if you're really good at what you do and you sell a business for $50 million and you sell it really quickly for $50 million, then, you can move on to the next thing. Yeah. If you are really good at what you do and you believe in your abilities, you can create a whole bunch of $50 million. Instead of one big unicorn that may never happen, you can build a whole bunch of $50 million.
Look, and the reality is, right, if you're that person, there ain't any way that you're going to be retiring early and playing golf. You might go and do it for 3 months, right? And you're going to be on the golf course going, I got to go and build something, right?
100%. Well, that's the part, because I make a joke and everyone laughs at me because I said that, like one of my goals is, I'd like to be retired by, the stretch goal is 35 and I'm 31 now. So, and the hard line would be 40. And they're like, what do you mean retire? You're never going to retire. I know you haven't stopped working a day in your life. And I don't actually mean retired as in not doing anything. I just mean being able to work by choice. But I always get laughed at even when I suggest that I'm going to take a long weekend away, because I haven't really had any time off since my honeymoon, which was 7 years ago, nearly 8 years ago. So they always laugh, they're like, I'll see that. When I see you in the Bahamas drinking cocktails, retired, then I'll believe it,
Yeah. No, we're coming to a wrap. I just want to quickly talk about your podcast. Where can people listen to it?
Yeah, so we've got a YouTube channel, the LoanOptions.ai YouTube channel. We've got a playlist in there that's got all of our podcasts that we're recording. And really what we're trying to do there is collect people from the fintech industry, have great conversations, teach people about money. So we've had some good guests about financial wellness, and also the entrepreneurial journeys. So anyone with a good story really doesn't even have to have, it doesn't have to be relevant to business, athletes or anyone who's got a unique story. I love listening to that and extracting that from people, letting them tell their story. So.
Now, Julian, we have some amazing talent listening to this podcast. I'm sure some of them would have been inspired by the conversation that we've had today. If they're interested in a career at Loan Options, where's the best place for them to go and find out more?
Yeah, so on our website we have a careers page dedicated. Tells people a little bit about how we do things, and they can just put in an inquiry there. That lands straight in my inbox, so I'll be seeing all of those. And also just DM me on LinkedIn or connect with me on LinkedIn. It's a good way to do it.
Awesome. Well, Julian, it's been fantastic to hear about the Loan Options story. Thanks for joining me today, and thanks for inviting me to your amazing offices. Really cool, I have to say. Pretty envious.
Welcome anytime. Thank you so much, Dexter.
Thanks.
I really appreciate you having me.
As always, folks, you can catch up with me on LinkedIn and Twitter. If you're new to the show, make sure that you give us a follow on your podcast player and leave us a review. It really helps me promote great founders like Julian to a global audience we're listened to in over 40 countries. If you're coming back, thanks so much for your support. It really does mean a lot. Until the next episode, keep well. Fintech Chatter is produced by Tier 1 people, leaders in fintech executive search. We'll find world-class leadership talent to build world-class fintech ventures, and you can find us at tier1people.com.